Bonsoir, good evening. Welcome to this event organized by Le Networking Committee, French-American Chamber of Commerce of the Pacific Northwest. So tonight we are having a conversation with Nathalie Boss, who is going to offer us precious insights on the Seattle and East Side real estate market. Please mute your mic during this presentation, and if you have any questions, please reserve them for the end of the presentation. Or you can also just type your question in the chat, and we'll address those after the presentation. Without further ado, I will pass the mic to Nathalie. And please, Nathalie, as an introduction, tell us a little more about yourself.
Hi, everybody. Welcome and thank you for being with us today. So I'm Nathalie Boss. I've been working as a real estate agent with John L. Scott for over 12 years now. I'm serving sellers and buyers all over Seattle and the East Side, and more elsewhere, basically wherever my clients want to go. Prior to that, I used to work for Ernst & Young in Paris. I used to be an audit manager. And I also worked at the finance department for the Paris City Hall. So I'm very customer oriented. I really like taking care of my clients' wants and needs. And tonight's topic is our hot real estate market and how to navigate it. So I'll just share my screen with you so we can go over a few slides together. Yeah. Okay. So the first thing we're covering today is the state of the market. So we are definitely in a seller's market. That's true for single family homes everywhere in Seattle on the East Side, but also in Federal Way, Tacoma, Carnation, Duval. Wherever you go, you'll see multiple offers on homes. It's also true whatever the price range is. So let me show you a couple of examples. And it's really not to discourage you, it's just to give you a picture of the market. So we do have, for instance, this Rambler in Renton Highlands. It was listed for $575, and it was very nice, with a nice backyard backing the May Valley Preserve. It received 62 offers. So it's insane. It's something we've never seen before. We do have another example, another Rambler in Bothell, listed at $725 and sold for almost $1 million. This one received 26 offers. It was very nice, very well maintained, but also very plain, nothing fancy. The kitchen needed a remodel. Somerset in Bellevue, listed at 1.25, went pending for over 1.7, and the bid winner, the winning bid actually on that one, released $100,000 of earnest money deposit to the sellers directly. So this is something we'll talk a little bit more in details later, but this is a new trend, and this is becoming a must to just release the earnest money to sellers. Here we are in Kirkland on Finn Hill, a 3-level home listed for $795, went under contract for over $950 and received 33 offers. So same, it was very nice, but nothing fancy. And in Seattle, just to show you that it's really across the board, that home was listed for $2 million and went for 2.1 in 6 days. So it is definitely everywhere. It's not to discourage you. It's it's just that it's not just a seller's market, it's a crazy frenzy seller's market like we've never seen in 20 years. So you might wonder, how did we end up in this situation? Reason number one, the historically low interest rates. So if we take a look at the home mortgage rates by decade, you can see that the 2020 years are definitely very appealing in terms of rates. As of this morning, for instance, the 30-year fixed was at 2.97% and the 15-year fixed rate was at 2.29%. So this is very appealing for buyers because it means an increased purchase power for them. And 18 months ago, we saw a lot of buyers entering the real estate market. They jumped off the fence to seize the opportunity. Reason number two, we do have in King County especially a persistent lack of inventory. So it's nothing new, but it's more and more. And there are many reasons for that. We do have a booming economy and a constant flow of newcomers. And actually the Puget Sound area is expecting 800,000 new households by 2050. But we do have an outdated zoning causing a scarcity of buildable land. So builders are constantly looking for land here. And the builders actually are struggling with many things. So the scarcity of land, the price of lumber, the lumbers are very expensive and the prices are going up, and the scarcity of trade skills workers. And reason number three, and I'm sure you guessed by now, COVID, because COVID hit us in March 2020. And it was already a seller's market. But then the real estate industry shuts down, as everything else, for a couple of weeks. And then we reopen. It is slow for a couple of months. And then by June, July, it's like a wake-up call. Everybody realized that it's going to last, that we are not going to be sending the kids back to school in September, that we will still be working from home. And all of a sudden, we are starting to reorganize our lives, and everybody does the same. And people take actions and are looking basically for more space. So we're seeing renters, young families, roommates, singles, everybody is leaving the city, the rentals, the condos, and looking for more space, for some kind of outdoor space. But at the same time, of course, the homeowners who are already living in the suburbs, they are not going anywhere. They are not moving anymore. They're just sheltering in place. So we have even more buyers, but we have way less sellers. There's no relocation anymore. And then we really have an edgy and tense market. And that's where really the market goes crazy. So I'd like to really dive with you into the main question. How do you navigate this market and what does it take to be a successful buyer today? I'm not going to detail really the basics, I just want to stress on what's really unusual and what the buyers have to do today that they didn't have to do yesterday to become homeowners. So really quickly, the prereqs, of course, you have to be pre-approved by a lender, or even better, fully underwritten. You have to be represented and to pick up your representation, so really your real estate agent, before starting your search. And your funds have to be ready in the US. Now, if you think that because your down payment is ready, that your closing costs are saved and that everything is on your saving account in the bank waiting for you to just purchase a home. So you're thinking, well, I'm ready, I am in a good place, I have all my ducks in a row. It's going to be a disillusion on the first try because unfortunately it's not enough anymore to just be ready with a pre-approval letter and a 20% down. You will have to show the money to the sellers. And by that, I mean that when it's multiple offers, the sellers, they have 10, 20, 30 offers on the table. They will want to pick the buyer who is the most likely to cross the finish line and to close. So of course, the pre-approval letter is important, but with prices going above listing price, the risk of the property not appraising is higher. So we'll go into the detail of that, but you have to know that by design in Washington state, the purchase and sale agreement is really protective of the buyers. There is a lot of provisions in a contract allowing the buyers to terminate the contract sorry, and to get their earnest money back. Earnest money being the deposit you do at the beginning of the contract. When you get mutual acceptance on the contract, you have 2 days to deposit a certain amount of money at escrow. So this is what we call the earnest money deposit. So all these doors that the buyers have in a contract to walk away are called the contingencies. And in our current market, the game plan is really to waive as many contingencies as possible because you want to be the strongest buyer possible and the one that who will really be binded by the contract. So we do have tools that we can use in a purchase and sale agreement to get there. And we do have what I call the little contingencies and the big contingencies. So I'd like to tackle really the big contingencies with you today. And I'm sure you've heard about the first one, the inspection contingency. This is your right as a buyer to conduct an inspection on the property you're buying. But in our current market, there's no chance you can include an inspection contingency in your offer. So you could do a pre-inspection prior to submitting your offer, or if the sellers provide an inspection, you can rely on it. But the goal is really to submit your offer without any inspection contingency. Then the second biggest one is the financing contingency. And that's where we're seeing the appraisal contingency, because the appraisal contingency is kind of a sub-contingency of the financing contingency. And really the appraisal, so in the US, for those of you who might not be familiar with that, the lender is going to warranty the loan on the property itself. The property will be the collateral. So of course, the lender wants to be sure that the property you're buying is worth the money they are lending to you. So they're sending an appraiser, and the appraiser is going to give a home valuation. So with the inflation in prices and the multiple offers situation, the risk of the property not appraising is higher. So the sellers, they will want the buyers to waive that risk and to waive that contingency and to show that if the appraised value is lower than the purchase price, the buyers have the ability to bridge the gap. And so that's where you have to show the cash and the money and to be the one who's going to say, well, even if the property is appraised at 800 and I'm paying 1 million for it, I will bridge the gap and I will put 200K more in down payment. So that's the biggest challenge these days for buyers, because it means that you have to show your proof of funds. You have to show that you can do that, and you have to waive the appraisal contingency. And really, what I'm seeing, it's the winners, I mean, the buyers who become homeowners are the ones who were able to show that they could bridge that gap. Then, of course, we have another tool, the escalation clause. So that one is not a contingency. It's just the tool we use to escalate in price. And we are seeing basically every single offer using it. And once you have waived all the contingencies, and once you have said, I'm okay to escalate and to go over the best competing offer, then you're not done. You can still release the earnest money to the sellers instead of just it at escrow. And basically you tell the sellers, okay, Mr. Seller, I'm giving you the earnest money. Instead of it staying at escrow, I'm releasing it to you. I'm not giving you 3%. I'm giving you 5, 10%. And whatever happens, this becomes a non-refundable fee and it belongs to you.
Oh.
And once you've done that, you want to be able to close quickly, especially if the home is vacant. That will make a difference for us. Yeah, so that's kind of the terms that are the winners' terms right now. So it's a tough market for buyers, and most of the times we are seeing offer review dates. So you know that. So the usual, the classic situation will be property popping up on the market on a Wednesday or a Thursday with an offer review date on a Monday or Tuesday of the following week. Then everybody goes to tour the property and start prepping the offer, the terms. But once you've been burnt a couple of times doing that, you want to submit an early offer and to cut everybody else. So we're seeing a lot of that. A property is listed on a Wednesday, on the Thursday afternoon, it's already pending, even though there was an offer review date on the following Monday. But to win at that game, your early offer has to be completely unbeatable. Like no contingencies, of course. We are seeing earnest money release for 200,000 sometimes. Wow. And way above asking price.
Sounds like New York market.
Manhattan. Yeah, and that's funny because we I mean, funny, not for everybody, but we are seeing quite a few people moving from California, from San Francisco to Seattle, and they have in mind that it's going to be much easier here. But lately I had a client and she told me, well, if it's like that here, I'm moving back to San Francisco. And I think we are reaching that point where, I mean, that obviously nobody wanted to reach. It's not an affordability crisis, that the market is kind of stuck, you know. So it's I'm really hoping that with spring and COVID, like in a couple of months, we can hope that it will be behind us, or that I hope that people will move again and that the market, there will be more listings. It's been a couple of weeks where the Thursdays were super busy with new listings. So we can hope for the market to ease a little bit.
Interesting.
Yeah. So of course, I'm not saying that doing that is reasonable, but it's really what it takes to go from buyer to homeowner. So unless you elect to look for a home in areas a little bit less competitive, where builders found land to develop. So for instance, right now we have like huge communities being built in Black Diamond. We do have a couple of national builders building in Sultan. So if you're open to more commute, it's way less competitive over there. After the bad news, let's take a look at the opportunities, because if you're a homeowner, you do have a couple of opportunities going on. If you haven't remodeled your home in years, that's the time to sell it as is. Right now, you won't really suffer the discount that usually outdated houses face a discount, but right now a homeowner won't face that and won't suffer really a loss because of that. So it's really a good time to sell as is and not investing in a new kitchen or a new bathroom just to resell. It's also a good time to cash out. Most likely you have, if you're a homeowner, you have a lot of equity in your home, so it could be a good time to just sell if you plan on retiring or leaving the state. We're seeing quite a few people leaving the state or moving to counties where the property taxes are lower than in King County. And if you have land, you do have something very special. So just be aware of that and maybe talk with a real estate agent if you have land that you might consider selling, depending on the zoning, but could be a good time to do so. And finally, if you have some work to do in your home, and if you want to cash out some equity as well, it might be a good time to refinance, because still the same opportunity, the equity actually that you're building is increasing a lot right now. So might be the time to refinance to be able maybe to do the remodeling you never did, or to complete another project. So what if you are an investor? Lately I got that question a lot by clients or people who want to invest in the area, because everybody knows that it's a good area, a good market, but not a lot of people know that it's such a challenging market. So we do have investment opportunities right now. It's a seller's market for single family homes and for condos on the east side, but it's not a seller's market for condominiums in Seattle. It's a buyer's market or a more balanced market. We have a lot of inventory right now, and the outcome of that is less competition on price and terms, and you might even have some room for negotiation. So, for instance, if we take the South Lake Union area, we do have 89 active condos, which is a lot for South Lake. And the average time on the market for these condos is 65 days. So this is a very long time. To give you a comparison. A house for sale on the east side or even in Seattle, the average time on the market would be 5 or 6 days, and just because you have the offer review date, because otherwise it would be 2 days. And if we take a look at the sold units in South Lake Union, on a sample of 200 condos, we do have a ratio of sold price versus listed price around 97%, meaning that they sell for less than the asking price. Now I want to give you a visual representation of what I just covered using graphs. So this time, it's not for condos just in South Lake Union. It's for condos in Seattle below 500K, because for when you are an investor, really, this is kind of the target most investors have in mind. So you can clearly see the shift. I want to show you in March 2020. So in light green are the units for sale, and darker green, it's the sold unit. So you can see that February and March 2020 were still a pretty balanced market, or even seller's market, but it's really shifted in April, and we are definitely in a buyer's market for condos in Seattle. And if we take a look at the number of days on the market, it's pretty high. In March, it was 48. So it varies a lot, because it varies depending on the number of units on the market, of course, but we can see that the average is approximately 50 days on the market. And the sold prices are below the asking price. So I just want to say a couple of things about the secondary home market as well. It's always been a pretty quiet market in the area. And all of a sudden, we've seen brutal price increases and a brutal shift from buyer's market to seller's market. In some areas, prices doubled in 1 year. It's true for single family, and it's true for land, as I was saying before. So I want to give you a couple of data as well, so you can see the shifts happening in September 2020. So really when a lot of people realized that it's going to be another year living with COVID, and that maybe it would be good to have more space, and maybe they cannot afford it in King County. So maybe it's good to go 2 hours away in Kittitas County and to be able to have a secondary home for weekend or for confinement. So we clearly see the shift between buyer's market and seller's market. And Kittitas County, it's the area covering Snoqualmie, Pihilum, the Tinaway, Roslyn, Ronald. So it's eastern, east of King County, and it's not too far away, so it's very appealing to people. And same thing so for the same county, the average price per square foot went from $230 per square foot to $326 per square foot. So it's pretty significant. And now I'd like to open the floor for any question you might have.
I have a question, Nathalie. When you say fully underwritten, can you explain what that means as opposed to pre-approved?
Yeah, of course. So we have 3 levels of let's say pre-approval. You have the pre-qualification. This is the lowest level. It's just, you get that when after 5 minutes of conversation with your lender. So it doesn't mean anything. You didn't provide any pay stub or any tax return. You just talk with your lender over the phone and he writes a letter of pre-qualification. So you don't want that. Pre-approval, you did provide a few things to the lender, probably your pay stubs, maybe a tax return, your status, visa or citizenship, and the lender already checked on your down payment and assets. So that's the minimum you want to have. And then you have the fully underwritten option when the lender gathers all the documentation, gives everything to the underwriters, and the underwriters review everything, ask the questions, clear the items, and basically you're approved. The only thing you have to do is to find the property. And then when you are under contract, the only thing missing in the file is the appraisal. So this is the last piece of the puzzle that the lender will need to validate to go towards full approval and funding of the loan.
Okay, thank you. Any other questions for Nathalie? I have another one. Can you talk to us about the refi rates right now from your experience? I mean, the range.
Yeah, the refi rates, it depends what you want to do. So it depends if you want to cash out. It depends if you want to refinance to shorten your loan or to reduce your monthly payments. So there are many options when you refinance. So it really depends on your goal, but it's around 3%, plus or minus something. But of course, if it's on if you shorten it, it will be probably less. If you want to cash out, it will be a little bit more.
Okay. Do we have any the equivalent of the co-ops that you can find in New York, where you're buying into?
Yeah, we have a couple in Seattle. Yeah, a couple of older buildings, very nice buildings in Seattle, red bricks, but very few.
Very few. Okay. Those are even more difficult because you have to do an application with the board of those.
Yeah, you have to be approved by the board, and it's older buildings in Seattle, and most of the time you don't have any parking space. You might even have the laundry room in the basement, or not the washer and dryer in your unit, but in a separate room. So it's a very different, and of course it's a restriction on the title because you have to be approved by the board.
Yes, yes.
So, it's a little bit. It should be a little bit less expensive because of the restriction. It's like when you have like a 55 plus community, it's a restriction on the title. So the price should be a little bit less. It's not the case now. I mean, if you want to buy in Trilogy in Redmond, it's as expensive as everything else.
Okay, I have a question in the chat, Nathalie. So
Yeah.
I read it. If you're looking to purchase a home around 500K, would you say you technically need about at least 100K cash to make a strong offer based on waiving contingency, appraisal match, etc.?
You will need 20% of 500. So it's already
about 100, yeah.
Plus the closing costs. You cannot finance the closing costs. So the closing costs are cash at closing. It's around 1.5% of the purchase price. It's not just fees. You have prepaid in the closing cost. So it's not like you're giving away this money to the lender because it's fees. You have the title and the escrow fees, but you also have prepaid, like you're paying in advance your homeowners insurance, the property taxes. So, but these closing costs cannot be part of your loan. So for a 500K purchase, you can go with 5 or 10%. It's not, you have to talk with a lender because your pre-approved amount depends on many things, not just on your savings, obviously, but also on your income and what other line of credit you might have. So let's say you need 20% down to avoid paying the primary mortgage insurance. And then you need the closing costs. And then ideally, you need to show that you have a little bit extra to reassure the sellers on your capacity to cover a bridge if there is a low appraisal. That said, we are not seeing a lot of low appraisals right now. We are not seeing any, actually. It's a 98% of the properties appraised.
But would you say that the market is a little artificially inflated right now?
No, I don't think so, because you're paying kind of a prime, to enter if you become a homeowner now, but we know that if you're keeping your home at least 4 or 5 years, you'll be fine. So
yeah, we're not back in 2005, 2006. It's not the same.
No, because the lenders are not lending the money like that. I mean, they're checking a lot of things. The regulations are way stricter. And the market, the demand is supporting that. So yeah, to my point, the properties appraised because we have so many, there are so many competing offers to show to the appraiser.
So it's a tough market, but it's a healthy market.
I think so.
Okay, Anthony, did we answer your question?
The prices are crazy. It's in some neighborhoods, it's really surprising. But we are not seeing any signs of artificially inflated market or anything like that.
Any additional questions for Nathalie? No more questions?
It's your chance.
This is your opportunity to know everything. It's actually because my son bought an apartment in New York not long ago, but over there you have to have 20% minimum down. and then you have to show that you have at least that much in the bank, cash.
But you have to show that to the lender or to the
no, to the
court?
Yes.
Yeah, I'm not surprised. Yeah.
So that means you need to have 40% of whatever you're buying.
Yeah.
So it's really, and it's also very competitive. So.
And still, even with COVID, because we've heard that New York was like a lot of people were fleeing.
I don't know right now. I'm talking about still 1 year ago. I'm not sure about right now. No more questions? Do I have another question on inspection? This is crazy that they actually you have to pay for the gap between the appraisal and the price you're signing that you agree to pay. That's very different.
Yeah, but it's very it's a nice protection for the buyer as well, because in a standard contract, if you're not waiving anything, if you're keeping your financing contingency, if the appraised value is below the purchase price, and as a buyer, you can either renegotiate the contract, pay for the gap if you can, or if you want, or terminate the contract and get your earnest money back.
Okay.
So it prevents the market to go crazy also, because it prevents the buyers to just buy at whatever price because the lender would follow. The lender is not following if it's appraised value.
Yeah.
So, and if you waive the appraisal contingency, the lender will still lend you the 80% of the appraised value. That's to bridge the gap.
It makes it a little more complicated to plan for buying your property. It just it's a little more complicated than before.
It's more figures and more math to do, and it's tough conversations with my clients, with my buyers too, because sometimes they're targeting properties. So now you cannot target properties at the max of your pre-approved letter.
Exactly.
You have to cap your search 20% below. Very frustrating. And sometimes it's very tough talk with the clients, because it takes time. It's a process. Right now, it's taking maybe 4, 5, 6 offers before getting a property.
Right. So what will be your advice? Just to wait until the market is evolving a little in a different direction? Or I mean, I guess if you really, really need to buy a house, then okay. But if you can wait, would you think it's a good idea to wait?
It's tough, because every time we're saying, yeah, you should wait, and then the prices are going up and not better. So I would advise to be realistic and to be ready to compromise on the criteria. I think it's still worth it to become a homeowner, because that's how you build equity. But you cannot get, realistically, you cannot get everything you want in the current market. You have to compromise on the location, or on the finishes, or on something. So hopefully something you can change and not something you cannot change. So that's why location is so important. The lot is important, the location. If it's a kitchen that you don't like, down the road, most likely you will be able to remodel that kitchen. You won't be able to change the lot or to change the road in front of the house. So that's what I would advise people to do, being resilient and patient.
And I guess it's even more important to work with a real estate agent in that market. It's like,
yeah, because you have to be ready and you have to have someone advocating for you. You have to have someone fighting for you. And the network matters too. It's kind of it matters to be experienced as well, because the listing agent, so the agent representing the sellers, when they have 30 offers, they want to be sure that the buyer's agent is going to cross the finish line as well, and that they are going to work with someone who's going to be able to close. So yeah, the selection of the agent matters. Yeah.
Ken, you have a question? You're on mute, so no? Any other questions? Oh, I have Anthony, another question. Talking about compromising the area, in your opinion, is the market in Federal Way more flexible?
Yes, we are still seeing multiple offers in Federal Way. It's going to be less crazy than in Bellevue. Of course, the prices are not the same. Yeah, no, it's I have clients. I mean, I'm talking about that because I had clients looking in Kirkland. I would say the usual, East Side, and we ended up closing in Kent because they got more for their money over there. So that's why compromising, it's what do you want? Do you want the location or do you want more house? So that's a choice. So they could have got a townhome in Kirkland and they got a 4-bedroom home in Kent with a nice backyard. Yeah.
Yeah. Anthony said more house, definitely.
So it depends on your plan, I would say, how long you want to stay. And these buyers of mine, I mean, they went above their initial price range by almost 100K. It took 5 offers to get there because it's a process. But the plan was to stay a long time. It was really, they wanted to build their life in this home. And so it was very important. So they were definitely more into getting a larger home than a location.
Okay, so another question from Ken. Aside from the quantitative factors that a seller wants to see, are there ever any qualitative factors that may sway a seller from going with your offer, which was the case before a little bit? I mean,
yeah. Like, do you mean, Ken, like the emotional factor as well, like the love letter that we used to see? Things.
Yes, that's
right. So the love letter is not doing any good. It's kind of has been. Sometimes it's even worse to have a love letter, So some agents are not presenting the love letters anymore. So the rent back is pretty big right now. So it's when a seller is selling and is saying, well, we can close in 3 weeks, but I need to stay an extra month. And so then, of course, the buyer is allowing that for free. So the seller becomes the new owner tenant for a couple of weeks. So that's kind of the quality. It's also quantitative because it's money, but it's more like qualitative because it's more like a gift, a nice, the buyer is facilitating seller's life. So if the seller needs an extra week to move or an extra month because they're buying something else, So the buyer is just saying, okay, take it.
So Anthony said it's all about the Benjamins.
Right now, a lot. Yeah. It's a lot about that right now. Yeah. And the appraisal. Yeah, it's Benjamin. Yeah.
Yeah, it's also Benjamins.
It's also Benjamin's.
And some people must be surprised by the price of the appraisal then, of the houses, of the the value.
Yeah, the value. Usually it comes back at value. So we don't see. It becomes a problem when we have like offers winning by over 25% of the listing price. When it goes above 25%, you know that you're at risk.
Mm-hmm.
You're at risk. And even so, that's when, of course, you have to waive everything and to show that you have money and so on. And basically, you're really providing your bank statement or screenshot of your saving accounts to the sellers. So it's a process as well, because some buyers are like, okay, I have that, and I'm like, it doesn't add up. I mean, we're not covering the gap, and they're like, oh, but we don't want to show everything.
Bye privacy.
Okay, but we have to show it. They're not going to take it, but we have to show it, So
yeah. Okay, any additional questions? No? Okay. Well, Nathalie, do you want to give the word of the end?
Well, if you have any other question for me, you can email me, text me. I'm easy to find. If you type Nathalie Boss on Google, I mean, you have everything popping up. I have a YouTube channel with small videos explaining specific things like the earnest money, the inspection, trying to do them in both languages, French and English, but I still have to add a lot of things, but it's in progress. And besides that, I hope you're not discouraged, because I think this is the greatest way to build equity over time. And I think it's good to start young. I'm a big believer that you have to start buying something as soon as you start working, even if it is small, even if it's not really close to your work, or you have to start. So I just want to thank you for being with me tonight, and enjoy the sun.
Thank you. Thank you, Nathalie, for sharing all your insights. It was very interesting and very helpful, I'm sure. Everybody saying thank you, and thank you for attending. And this is recorded, so I guess we'll make that available as well for the people who couldn't be here tonight. We'll send an email to the people who signed up to watch the recording. Thank you very much, and everybody have a good evening and a happy spring.
Thank you. Merci.
Bye-bye.
Au revoir. Bye.